Hello, everybody, and welcome back to the Dash Trader Newsroom. When is good news bad news for the financial markets? When do we enter into the financial world's version of the upside down? My name is Michael DeJoy. I'm the Director of Education. I'm a licensed professional here at Dash Trader, and I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from Nasdaq. Jill, how are you today?
Good, doing well. Thanks so much, Mike.
Great to have you here as always. Good to see you there in the Nasdaq market site. I'm just going to jump right in, and we had some key inflation numbers today. The outcome was better than expected. The inflation number increased by only 0.2% since October. The question is, Jill, do you think that we have kind of hit peak inflation, and that now things are going to start to tick down? I mean, that's potentially really good news for the market if the Federal Reserve thinks so and starts to get a little bit more dovish.
Yeah, that's actually a question that we've been asking ourselves and multiple guests on the show. I think, Mike, part of what it is that we're getting these readings that suggest that it's, inflation's around 7.5%, 7.6%. But anecdotally, everyone that you speak with, things are 15, 20% higher, right? So perhaps it is peak inflation, but it really feels as if it's stretching people's pocketbooks, if you will. Things, again, are more expensive than they were last year. Savings are dwindling down. I think the real tell is going to be in Q1, Q2, when we see how strong the consumer is then. There is a lot of pent-up demand, and we saw that over Black Friday weekend. But with the ability to pay those credit card bills back, I think that's really going to be the tell of how strong the consumer is. And then also when we get into earnings in Q1 for Q4 with the retailers, just how margins have been impacted, how well inventory held up, and any other related macro factors that are impacting the retailers. And as you know, with the retail space, there's the haves and the have-nots. There will always be under and over performers. So I think we'll truly get the picture as we get into the earlier part of 2023.
Absolutely. And speaking of the under and over performers, Costco came out and they showed an over 10% drop in online sales year over year. I mean, the big question, Costco traditionally does really well online. Is this possibly a bad omen for the retailers during the holiday season? Or is, Costco just in, kind of like Target was, where Target kind of underperformed Walmart. Walmart really did not have, terrible numbers, but Walmart also has a tremendous grocery business.
Yeah, you know what, Mike, I think you have to look at it more holistically. Online sales is just one vertical of their revenue stream. And one thing that I've noticed speaking with different retail strategists and industry specialists is that the omni-channel presence is what's really key. And I can tell you, just by the shopping that I've done, I've never seen the stores as full as they have been even prior to the pandemic. So I think, there could be a contraction on online because there are people who are going in the store, whether they're buying online, picking up in store, whether they just want the experiences that the brick and mortar is offering right now, if it's more of a social thing because everyone's back together again this year. But I think it really depends on what inventory looks like, what margins look like, and what the overall revenue picture is, because they're deriving it from different verticals besides just online this year.
Got it. Yeah, I think it's a very big social thing after 2 years of pandemic lockdowns and limited live experience. It seems to me like, at least in New York City, things are really buzzing. I mean, things are packed in New York City, and especially in Brooklyn. I mean, Brooklyn is absolutely buzzing. I don't know. Certainly, Brooklyn looked a lot more busy than what I've seen going on in Soho these days. Which is very interesting. Some of the high-end retail spaces in Brooklyn that I've been to certainly have been pretty packed.
Yeah, well, Manhattan is kind of interesting, and I've spoken to a couple of local business owners here. They appear to be packed, particularly restaurants and bars, because so many have closed down over the past 3 years related to the pandemic. So, for example, somebody who works by Grand Central, I think it's 45th, 6th or 5th, anyway, around, or Park Avenue, around there. They had 5 coffee shops on their street, which is not unusual in the city. There's only one now. And rather than $4 for a cup of coffee, it's $6.50. So there's less retailers, the prices are going up. So, when you think about, oh, the bars or the restaurants are super packed in the city over the weekend, a lot of it is there's less establishments. And of course, there
Yes.
is pent-up demand. We can't ignore that. But you're even seeing it, where I live in the burbs, this weekend, it just seemed as if everything was packed, parking lots full, like no spaces available. We have
Yeah.
not seen that in quite some time.
Yeah, and I kind of experienced that as well, and certainly it seems like people are back to they're looking for the actual physical shopping experience. Whether or not they're buying or not is a different story, but certainly the physical in-person experience. People are out and about and still spending money. It seemed to me anyway. With that being said, we have two other items the markets seem a little bit nervous about. Tomorrow we're recording this on a Thursday, so by the time this gets released, the new jobs number will no longer be looming. They will be out. But certainly, I did see a couple of reports that there was a lot of concern about the jobs number tomorrow. That if the jobs number was good, that shows that the economy is still heated, and that potentially the Fed would be a little bit more hawkish. Whereas if the jobs number was bad, that would be what they were looking for, which is a bit of a slowdown, and that the economy is slowing down a bit, and then obviously they'd be a little bit more dovish. On a different note, it also could have been that we had a little bit of a reversal today on Thursday due to the looming December 5th kick-in or start of sanctions from the European Union. European Union back in June promised to sanction Russian oil, and now those sanctions are about to kick in. I think it really hinges a lot on how China and India deals with these sanctions and whether they continue to comply and whatnot. But the big question on everybody's mind is how might this affect the worldwide energy market? So I'd love to hear you weigh in on the sanctions that are kicking in potentially on December 5th and how that might affect the energy market. And what is the market nervous about? Because, we kind of had some good numbers going into today, and it kind of faded away a bit, as the day went on.
When you think about the energy space, I think the big stories here, in addition to the sanctions, is what does China look like in terms of loosening the COVID restrictions, because there's a big piece of the demand puzzle that's missing from global demand. And once that comes back online, that's certainly going to impact the picture. I feel like there's always threats of sanctions. And I think the other big variable is going to be what happens over the winter in Europe and how they'll be able to, sustain energy needs, as they don't have the benefit of Russian energy to power their economy, and so and to power their homes and economy and so forth. So I feel like those are really what the outliers are, and it's really hard to gauge the demand picture because it is skewed with those variables.
Yeah, and I had one last question. I saw this pop up. It was the former CEO of FTX came out saying that he didn't intend to commit fraud. What is your thoughts on? I mean, because usually somebody going through this kind of scandal where his company has gone bankrupt and he potentially faces serious criminal charges here, they don't usually talk and come out and weigh in on it. So what are your thoughts overall on how this FTX can? I mean, so I did a little research in the last 2 weeks. An FTX is about a $25 million impact, whereas Lehman Brothers was a $10 trillion impact to the markets,
Yeah.
the failure of Lehman. So certainly from a scale perspective, this is a small event in kind of an outlying market. But what are your thoughts on his being so open and kind of just coming
So
out there and saying he didn't intend to commit fraud?
there's a couple things to unpack here. It's different than 2008, 2009 in scale, to your point, and it is systemic within the crypto industry. The difference is that it's not systemic within the traditional finance industry, because there is no central bank to bail them out, right?
Yes.
So it's more on the creditors, the investors, the capital they put up for that. The central bank is not going to come in and bail them out. That's why you don't have that systemic with the traditional financial system. I think the fact that some of the smartest people in the room didn't do their due diligence is a bit concerning. I think that's, it might lead to more questioning about investments that are being made, which could be a good thing. With the alleged fraud, I think there's a couple things here. Certainly a level of narcissism, ego, stupidity. Whether it was fraud by accident or not, commingling assets is like don't go to jail 101 in our
Yeah.
industry. So there really is no excuse. I think this is something that can't be apologized away. I think every time he speaks, he makes it more difficult for his attorneys to build a defense. You know how it is in the legal world. Everything that's
Yep.
said has very specific nuances.
Hmm.
So, even saying something as simple as, no, I did not knowingly commit fraud. Okay, but you just said that there was a fraud committed. That's how it works in the legal world. So the more he speaks, I would imagine it makes his attorneys' jobs more difficult.
Absolutely, without a doubt.
Yeah.
I completely agree, and I think that was a great response because it did show some clarity into why people don't usually speak on the record or publicly, because you're immediately on the record, when something like this transpires. Well, thank you so much, Jill. I
You're
want you to
welcome.
have a wonderful, wonderful weekend, and I can't wait to see you in 2 weeks. And I'll see you next time.
All right. Thanks so much, Mike. Take care.
Have a wonderful holiday too, and I'll see you in 2 weeks. All right, so let's jump right to the Dash Trader software, and we can go into our market analysis. So let's jump in here. So we got market analysis, and let's move over to Dash Trader. All right, let's get started with the market analysis. First is the QQQ. Okay, the QQQ, you can see that we've come to very close to the top of the upper envelope, which would be considered resistance at this point. It lines up with the natural resistance level of 300. 300 is a natural resistance level just because it's a whole number and a round number. And then you also see that it's also where the top of the upper the envelope stops. We also have the SPY, which has already hit the top of its upper envelope at 407. And we'll watch and see, how that progresses. Apple, we've said a couple of times, so goes Apple, so goes the rest of the market. And here you can see Apple is in a really tight consolidation, and it's closer to the lower part of its channel. And if it breaks that upper envelope trend line, it will probably move to the resistance level at 174. The support level is at 170. At 130, so very big range between 130 and 174. But that's what it looks like on Apple. MSFT, Microsoft, has already broken out to the upside. And a lot of times Microsoft and Apple trade in tandem. Now, there were some indications that Microsoft, was having a bit of a bad holiday season for a number of reasons. Obviously, they got the Xbox, they have obviously the Surface Book, but you can see that already Microsoft is moving back towards the top of its upper envelope in the down channel. So that's Microsoft. Now, one of the things we mentioned was about the oil market. We're going to use USL, the ETF, the 12-month futures ETF for oil. We put in a low and then a higher low on USL, and we're now moving up to the resistance level. Needless to say, USL does look like it's going to be breaking out to the upside, especially considering the direction of the US dollar, which we're going to talk about as well with gold. But USL, the oil contract, indicating that it's put in a low, a higher low, and possibly a move to the upside. We have USL. We have the oil ETN, which is OIL. Oil ETN looks pretty much like USL, so that kind of just confirms it. Last but not least, we're going to take a look at GLD. Now, we talked a lot about gold in general. Gold has a natural increase in demand this time of year. A lot of people buying gold gifts. They've already been bought. They've already been produced. So gold has a natural increase around this time of year as people buy golden gifts. Not only that, gold also acts as a inverse to the US dollar because it was we call it the old man for a reason. It was the old currency. It was what backed currency before we went to this floating currency system. Needless to say, gold is a bull flag, and it looks like it's about to take a move to the upside and go a little bit higher. So looking good for gold. And then finally, last but not least, GBTC. We have Bitcoin, the Bitcoin tracking ETF, which is GBTC, and you can just see the lack of confidence in cryptocurrency, specifically Bitcoin, as as Bitcoin continues to stay in a big, deep, dark downtrend. By the way, it's not just gold that's having a nice move to the upside. We also have silver looking positive as well. Silver tends to outperform gold in good markets and underperform gold in bad markets. So silver also a good way to participate in this kind of seasonal move up in the the gold and silver or precious metals category. All right, let's jump to our updates. Stay up to date with all things DAS by signing up for our monthly newsletter and email. Simply fill out the form at the bottom of the webpage at dastrader.com. Subscribe to our YouTube channel on Dash Trader TV and follow us on social media at DAS on LinkedIn, Twitter, Facebook, and Instagram. I look forward to seeing everybody in 2 weeks. I hope everybody had a wonderful Thanksgiving holiday and looking forward to the holiday season. See you all in 2 weeks. And remember, we have an important announcement coming up for our #1 Best Trader competition sponsored by Cobra Trading and Benzinga, as well as DAS and the Nasdaq. See you all in 2 weeks. Have a wonderful, wonderful weekend.